Hi, my name's Nick Gustafson. I'm a partner at Bender Commercial Real Estate, and today we're going to talk a little bit about the multifamily market here in Sioux Falls. We've seen some really interesting things going on in the multifamily market, and I thought I would share it with you because, believe it or not, the year's more than half over, which is kind of crazy. First off, multifamily has been a really healthy market for Sioux Falls over the last couple of years with low vacancies, and developers are just going gangbusters. A couple things that are really interesting that are happening right now is we're seeing a big pop in sales. At our market outlook about 6 months ago, I predicted in my investment presentation that we would see a strong increase in sales, and that's already happened. Midway through the year, we've sold over $22 million worth of multifamily properties, and that's contrasted with, for the entire calendar year in 2014, was $15 million. So we're up almost over 45% just already this year over last year. So right now what we're seeing is larger properties, finally selling. For a long time we weren't seeing a lot of multifamily owners selling because things were so good. They were at record low vacancies, and they were often able to refi and get, money's cheap right now. What we're seeing right now is we're seeing some newer, larger properties selling. For a long time we weren't seeing any properties, younger than 30 years old selling. I sold a 15-year-old 32-unit apartment building a couple of months ago. There was a 36-unit apartment building that was 18 years old and a 48-unit that was 20 years old that have sold just in the last couple of weeks here. So it's fun to see some of the newer stuff sell and kind of set that market at those newer price points. We have seen some very large older products sell just in the last few months as well. Cleveland Heights, 147 units. East Park and Sycamore Village apartments, together about 130 units sold as well. So we're starting to see people taking advantage of the healthy market and take profits off the table. Vacancy, is always discussed with multifamily properties. The last citywide survey that was done about 6 months ago, the citywide conventional vacancy rate was under 4%, which is extremely healthy. This new number that's going to be released in a couple of weeks, everyone's going to be watching that. The general consensus among people I talk to is that number's going to nudge up a little bit, maybe a percentage point or so, but it's going to remain relatively low, which is really good news. Vacancy is largely a function of new building permits or new apartments that are being constructed and the growth of the community. So last year we grew as a city of Sioux Falls over 4,000 people, bringing our population to 170,000. Our MSA is roughly about 250. That's really solid growth for a vibrant yet smaller community like Sioux Falls. And when it comes to building permits, last year, unless you've been living under a rock, everyone knows we've been building a lot of buildings in Sioux Falls. Multifamily units, we built just over 1,000 new multifamily units, or 1,200 units, depending on whether or not you personally count townhome units in that number, because that product type is often leased. To put that into perspective, it's 5 times the amount of construction that we did in multifamily in 2010. Believe it or not, the most recent city numbers that I've seen, which was of June 15th, is that we were just under 400 new multifamily units so far for the year. So we're actually slightly behind the pace that we set last year, which is really good to see. Developers show some restraint. I mean, it feels good to build a new apartment building right now because interest rates are very low, and often these developers on these larger products are able to lock in long-term money, so it really locks in that low cost of borrowing. It's nice to see some restraint in that perspective. Interest rates. Still, interest rates are historically low. 10-year treasuries this morning were 2.32%. I'm very optimistic that the rates are going to stay pretty low here. I read the Wall Street Journal like everyone else does in the morning, but I truly wonder if the Fed's going to raise rates in the fall. I don't know. You probably don't know. But the good news is that interest rates are going to be pretty low here for the next couple of years. which will be great for buyers, which means it'll probably be great for sellers too, because their properties are full and they're going to be able to sell at a premium based on, you know, valuations of even just a couple of years ago. That's pretty much what I have for the mid-year report on multifamily. It's a really exciting market to be brokering in. I've personally sold over 100 units so far this year. You know, I've always enjoyed, you know, working with multifamily buyers and sellers, but it's been really fun over the last couple of years. You know, the biggest challenge for buyers right now remains there's just not a lot of inventory on the market. You know, if you called me right now and asked me, you know, how many listings I had in Sioux Falls, I'm out. I've sold them all. There's very little good, decently priced inventory. What's happening is a lot of this stuff's happening off market. The property's listed, and you know, within 5 to 10 phone calls, a good broker can, you know, sell something. So that's really the challenge for buyers right now. You really have to be able to act quickly and kind of be plugged in to the deal flow. Thank you very much for taking some time to take a look at this Periscope. It's our first Periscope as a company. It's certainly my first Periscope. It's really exciting. I would appreciate some feedback. If you would like to contact us or get additional information on Bender Commercial Real Estate, you can visit benderco.com, benderco.com, and we'd love to interact with you. You can call me on my cell phone, 605-201-2809. Thanks so much.